This is Justin for Tuesday, January 10th, 2023. Take a look at SPY on the daily. So, it had a really great bounce right here off of the 100 at 387. Came down a little bit below that. That's all right. We had maybe some reason to do that. We're going to jump into the 3-minute here. And looks like we got a really nice S curve, kind of a retracement back down about the middle of this run up that we just had. So it makes sense. The 387 price is right here. I'm sure people were seeing that come down to that price or open up right on that price and looking to buy. They bought it up right away, came all the way back down here and retested it. Went through a little bit. Like I said, that's fine. It kind of retested the pivot here, pivot back here. Actually, really, really well. The pivot back on January 3rd. The other thing I saw here is that if we do actually draw a fib retracement, I'm just going to kind of approximate this. We do a really good job of holding these highs and kind of framing up the low with the 382 and the 50%. And then also with the 618, I'm going to leave this on here and I'm going to zoom in. If it'll let me, I got to change this. There we go. I'm going to zoom in on just today. We're going to look at the 3-minute here. And so, there was a lot of choppiness, a lot of bigger candles. I'm looking for the 10 EMA setup. So it was gapping down to open, still pretty much an inside day. So we're going to look for things to kind of settle down. So this was where it settled down really nicely. We're right above the 618. And there's actually a couple setups here that wouldn't have worked. So the first one here is this candle. It could be your entry. That was a bad line. That could be your entry. And then the next candle, it's like, oh, well, that could be your entry. And then you could have been wicked in. Your stop is down here. And after this much time goes by, you probably want to bring your stop up a little bit like this. And you're like, okay, this isn't going to work. Maybe I can get it right below that wick. And you're probably trailed out or stopped out for maybe half an hour loss, something like that, maybe 0.6. So that one wouldn't have worked. And then on the bearish side, and there were other bullish ones in there too. On the bearish side, it's like, okay, there's a breakdown here. We've got this as resistance. That's kind of nice. The very next candle here actually works to break down. So this would kind of be your setup like this. And it starts to work, retraces, maybe stops you out, maybe doesn't, flashes down, maybe not flash, but 6 minutes later, it's way down here. And it's like, oh, it's going, now it's going to go. It's going to come down to this level. Nope, it just reverses. And it's like, oh, stopped out here. This was the only thing, like if you had moved your stop already, you would have been stopped out. I'm not sure where you really could have tightened your stop to because there was a wick here, but then this candle tagged there. And you may have been stopped out a little bit earlier, maybe for like a 0.8 hour loss. Okay, so that one wouldn't have worked. So, okay, try again. You've tried bullish, tried bearish, both didn't work. Maybe wait a little bit, maybe wait for that perfect candle. And then I see that candle it's really that perfect candle. It's tagging the moving the 10 EMA. It's a close above. It's not a bear candle, but it's also not a bull candle. It's just a flat candle. So setup could be getting in bullish here, going with a move above, and your stop could be here or maybe down here. Any of those would have worked. Excuse me, in this case, actually would have worked. Another place you could have gotten in, almost the same kind of setup, is getting in bullish here. That would have triggered. And your stop, again, your stop would need to be a little bit lower. I would say at least down here below the low of that high wave candle. So you're going to give this one a little more room just because it's already moved up and you missed some of it. So it's like, okay, give it a little more room. And we can look at the option of this. This would have worked out here for a nice setup. So let me change colors. So here is another one. So that would have worked. Probably get your stop down here. All these would have made it up to, at least 1 R, maybe 1.2, maybe 2 R. This first one worked out really well. That's something. So let's go look at the, oops, let me delete all that. We're going bullish. Let me see if this frames up nicely. with, nope, everything jumped. All right, so I got to redraw it here. I can do that. All right, delete all that. So the first one, that would have been, this is the 3-8 call. That would have been entry here, about 1.2, and a stop, conservatively 0.7, maybe 0.8, 0.9 or 1. You're really, I mean, you can't do 1. 0.9 maybe, so that's 0.3 risk on the option. To do that, you're into 3 contracts for $100 risk. That could work. And then if you had done 1.2 by 1.7, then you're looking for 1.8 target. 1.8 would have filled over here. You would have been tightening up your stop a little bit. I hope you weren't stopped out by this, but it's entirely possible you were stopped out or trailed out for a small gain with that. So that was the first setup. The other setup, or the next one, was getting in bullish here, and your stop would be down here. Right? Let's change colors. That was the yellow one. So getting in here, stop down here. So this is getting in about 1.45 and a stop down about 0.95. So that's 2 contracts for 0.5 risk for each. So $100, 2 contracts. And then your target would be 2.05, right? So 2.05 is right here. So that would have worked really nicely. I think this one would be easier to tighten up your stop a little bit and then wait for that pivot to come in and then get it right there. And then, you know, when it pushes up, comes back, then you tighten your stop here, and then it runs up, pulls back, and then over here you tighten your stop here, and then, you know, it's going to hit target before you can actually move the stop up above where you entered to have a positive trade. So that's the next setup that would have worked. And then I think we need this color. I'm going to go back and check forgot which time that was. This one. So that was 12:27 Central, so 12:27. That was this candle. Okay. So right here, you'd be getting in at about 1.5, and your stop would need to be about 1. That would work. So this one's very similar to the 1.45 and 0.95. So you're going to look for a target of 2.1 in this case, or 1.2R. And that would have actually filled here. This one was probably the easiest, that you could tighten up your stop a little bit here. Sorry, it moves up, pulls back. Over here, that's when you turn your stop to this one. It moves up, pulls back, holds the 10, then you get your stop up a little bit tighter here, maybe here, and then you're hitting your target already there. So each of these trades, you're in for, you know, I think the one that you were in the longest was actually the first one, right? So if you were in at about 1.2, looking for 1.8, so that would have been over here. So that would have been about an hour and 15 minutes, give or take. So a little more than an hour looking for moves with the options. And you waited long enough, let the choppiness go away. You're looking for a bullish trade because you've got, you know, this kind of a bull move. You've got support showing you've got a fib retracement. You've held that 50%. You're breaking out above the 618. A lot of things are saying, okay, there's some bullishness in this. And even if we just look at kind of what's going on here, this might just be my eyes. I'm going to delete this now, but I'm seeing just kind of some inverted head and shoulders going on. So I've got something like this. This is a little challenging because I'm going to kind of discount that and draw a neckline like this. You could, there's different ways to draw this a little smaller. Be like, okay, well, here's, I don't even like that color. I like the brighter colors. There we go. So you could do something like that. Okay, so that's a quick neckline that broke out, retested, and then didn't bounce. So there's just some different things to see with this, but that's part of that overall curving. And the other thing you can do is just be buying blind, and I'm sure some people are buying blind way down here, right at the 387 price, right at that 50% mark that was going through here. All that support. It's like ideally on these S curves, you buy at the low of that S, trusting that, not trusting, but looking for it to repeat what it's done in the past, where you have some kind of retracement on a bigger move. And so, I'm drawing it zoomed in, but here's your S curve. You want to buy right here. And if you don't know how to do that, I don't know what all this means, click the link in the description and set up a free account and learn. There's all kinds of things on the dashboard there where you can learn intro to trading, beginner, whatever it's called, intermediate, advanced, anything you need to know, all for free. And quizzes along the way, videos broken out for different topics, but all of it to just teach you the basics, teach you what to look for, all this technical analysis. And hope this helps. This is Justin. Thanks.